Now you know how to navigate your brokerage app to the extent necessary to be a trader, okay, to navigate options trading. There's endless things that you can do with an application like Thinkorswim and with many brokerage applications, such as setting custom scan tools or doing custom indicators, importing information from third-party applications or writing your own scripts. These are really not necessary to being a good trader, and a lot of that I'm going to show you how to do on TradingView, which is a third-party application that I do all my charting on. I simply use Thinkorswim for executing my trades, and I do most of my planning and charting on TradingView. If you want to make money on the market, you need to understand these basic concepts. The market's job is to figure out the price of all things at all times. And the market's actually relatively good at this impossible task because you have as many participants betting on what you think those prices are in real time. And what does that mean? That means in real time, they also have to adjust those prices as new information comes in. Okay, it's in these moments where as a trader, we can get our edge when the market is adjusting to new information, all right? And that's because of efficient market hypothesis. Most of the time, markets are pretty good at coming up with the price of things. There'll be lots of people who debate and try to fight the market. Those people don't make money, all right? We let the market tell us what the price of things should be. We don't ever want to assume that we're that much smarter than the market, that we know something no one else knows. We follow trends, right? As a trader, that's our job. We don't build our bias onto the market. We react to the market, right? Small note here, but make sure you're recognizing that I am talking about trading and not investing. There may be many times where you take an investment where you think that this will have a price appreciation because of some sort of catalyst that you're looking for, some new development from a company. And in that case, the market might fight you in the short term, give you a cheaper price, and then you buy more of that asset. That is the mindset you should have for investing. But remember, that's not the mindset you should have for trading. It's very different. There should be two different brains that do each of these tasks. So it's in these inefficiencies when the market's changing prices that you can actually get your edge. Because when the market is telling you this is the price of this and the price is just flat, if you try to fight that, you're competing against institutions, you're competing against big banks, you're competing against automated algos, and that is a nightmare. That's where you're going to get cut up. That's when you're going to lose your money. But when the price is adjusting, and in those adjustment periods where something's trending up or down, that's where you can get a competitive edge, and that's where you can actually make your money, okay? When the new information is being processed, which means you're patient when markets are flat, and which also means that you wait for clarification and you wait until you have confidence, okay? All right? Never feel FOMO as a trader because there's a million opportunities. Okay, there won't be a once in a lifetime thing. It'll happen again. There's no worries. Okay, if a trade kind of looks appealing to you, but you're not certain, let it go. Just wait for the next one. You'll be just fine. Now, the way that you also will actually make money is by always following a plan. The plan can be stupid simple as long as you have a plan, and then you use technical analysis as a confirmation tool and not a bias tool. Don't be saying, oh, this should go down, and then try to pull up the technicals that point to it actually going down, rather than letting the technicals you use all the time tell you where the price is going, okay? Use it as a confirmation tool, not a bias tool. Never try to paint your opinion on the market. So let's go ahead and break down what my trading plans look like. So all my trades follow this very simple setup. I identify the trade. I determine risk by setting targets and stops. I systematically lock in gains and ride winners, always taking profits. I'm up 20%. I'm taking a fourth of the position off. I'm up 50%, taking more off. Maybe I hold a few for runners if it continues to trend to the upside, or I'm rolling the position. I always honor my stop loss. If it hits the stop loss, close the trade. Maybe revisit it. If it returns and you get back in it, that's okay, but always honor your stop loss. If you don't honor your stop loss, you're not following a plan, you're likely acting emotionally, and our brains are terrible judges when they're acting in an emotional way, right? Okay? So we want to try to stay as logical as possible. And by doing that, you need to follow a plan. And then after you're finished with your trade, review the trade, maybe make some refinements, and then repeat the process. Okay. So I have more refined strategies that I use for things like swing trades. So for me, my swing trades are typically going to follow this process, right? I'm going to identify a stock with a clear bullish or bearish sentiment. Typically, the way I do this is I start with a sector I like. I then look at the top stocks in that sector, judging them by market cap, because the market has told me that these are the biggest names. I then use some technical tools. For me, I like using Fibonacci's in unison with Elliott wave analysis to determine my targets for profit. I then use Dripster EMA clouds to confirm if the trend is intact. And then I let the trade play out for catalyst, taking profits at my targets, and I honor my stops, right? This whole process is built off this simple framework, right? For all my trades, okay? For my day trades, same thing, right? I identify key levels before the day begins. I use technicals to confirm pivots and extensions. I'll use a combo of fibs, EMA clouds, TTM squeeze. I'll also use relative volume and RSI as well. We'll talk about all of this later, don't you worry. If a trend is strong or a lotto, I play 0 DTE, which means 0 days to expiration. Okay, if weaker, I play a weekly, all right? So for lottos, we'll talk about that when we talk about risk management. And then systematically lock in gains. If targets hit and trends look strong, roll position with small portion of profits, right? So if the stock is trending well all day, I'll continue to roll up my option strikes. And what that does is it keeps me exposed to it. But as I get further away from where the stock price is, I'm also paying less, right? So I'm managing my risk throughout the trade by lowering my allocation to the trade, because I'm always thinking in terms of the money I put in here can possibly go to zero. So that is my risk, right? My risk is my exposure. And then I control that further by setting a rating for my trades, right? And we'll go over the rating process here. So the key things to keep in mind for your mental, which is so important, is you have to accept variability. You have to think in bets, right? Every trade you take is a bet. You might have the perfect setup and it just doesn't work because there's some news that blows up the trade, all right? Or you might not have a direct path to what you think is going to play out, and the stock will chop and it will fight. Maybe it takes 3 hours rather than 5 minutes for your thesis to play out, and the market chops and tries to burn you out. You have to accept the variability. You have to be at peace with things you cannot control, right? And that's about embracing uncertainty and making decisions with the best available information. Sometimes something new comes out, you didn't know it. That's okay, right? Sometimes you're going to enter into a position and you really don't have all the information, but you have a feeling that things are going to work out in your favor. So you're making a bet, right? You're making a bet with the limited information you have and trying to make the best assessment you can. Okay, you want to focus on the quality of your decision-making process and not just the outcomes. So important. Repeat it again because it's so important. Focus on the quality of your decision-making process and not the outcome, right? Because sometimes things won't work because of things that you couldn't control or because new information came out, and you'll say, oh, that was bad because this happened. Okay, was it bad though with the information you had? With what you knew, was your decision-making process good? Because when that comes up again, and you still don't have that information, you're in that scenario again, 9 times out of 10, that will probably work in your favor. So if you focus on outcomes, you're going to get bad data. You have to focus on the decision-making process. Focus on your plan. Was your plan good? Okay, then try it again and let probabilities play out in your favor, because probabilities are going to be your path to success, right? You get rich over 100 trades, not over one trade. And for that to work, you have to win 70%. What does that mean? It means out of 100 trades, you lose 30 trades. 30 times you lose money. Right? So you have to think in terms of probabilities and be open to adjusting your confidence levels. We covered that, that's also become with rating your setups. Recognize it separates the skills of skill and luck. There should be times where you're super lucky, times where you're super unlucky. leverage group input and constructive consent to improve decisions. That's one of the great things about the Discord. This is not supposed to be an advertisement for the Discord. This is actually supposed to be an alternative for people who don't want to be in the Discord. But whether you're following key figures on Twitter that you really like, remember, when you're following people, follow people who actually share their names. Do not act in anonymity, because, or at least have a brand, because then at least there's something they're putting at stake when they throw out an idea. Like, don't go to Reddit. Reddit is absolutely horrendous. You want people who actually are staking their reputation on their ideas, and that's how you get higher quality ideas. Or, academic debates or something are also a great tool for you to hear ideas kind of be battled out rather than a one-sided telling of things, right? That's how you turn into, a lot of these people that have much bigger followings than me. They're like perma-bears, right? They're constantly bearish. Market's gone up for 10 years. For 10 years, they've been bearish. Like, these people don't make money, but they have huge followings because most people don't make money. All right? Right? Most people don't make money, so these people have tons of followings because all these people are not making money because they're bearish all the time. You don't want to be that, right? You want to trade outside the bell curve. You want to be one of the few people who actually make money. If you want to do that, you got to stop following the crowd. Okay. And then you want to continuously learn from both successes and failures to refine your decision-making process, right? So, my gosh, how many people I've talked to that are like, oh, I lost a few thousand trying to trade and then I quit. Okay, well, you spent six digits on your college degree, and let me tell you what, you get good at this, you're going to make way more than you would from any profession. All right, you get good at this, you're basically learning the process to create money from nothing, just sitting at home making your money, make more money, right? So part of this process will be a give and take with the market. Sometimes you just got to pay for the lesson. Now let's talk about creating trade ratings. You might have your own process. This is my process. And the big thing with me is keeping things as simple as possible. Simplicity and not more complexity has led to me being a much more profitable trader. Okay. So I derive my trade ratings off a point system. All right. And these are the things that can get you points: key levels, a catalyst, and market alignment. Okay. So for day trades, sometimes we do play without a catalyst. Sometimes we're using like a tailwind. We're playing into a trend. We're just looking for the key level, and we have market alignment. Sometimes you just have a major key level break and you go for a quick scalp trade. That would be a C, right? Sometimes you have all three of these, and that would be an A trade. If something's an A trade, I put the max I'm willing to risk into the trade, right? And there'll be other things that you should incorporate into your risk management that we'll talk about at the end of this course when we cover risk management. But just simple framework, that's what I use to rate my trades. I rate all my trades, and it has been very key to my success to follow that process.